Hey everyone, welcome back. Today we're going deep on a concept that I think can be a little intimidating for some people, especially if you're newer to trading. It's leverage. We're going to break down this YouTube video from Riqueza Vital that does a really good job of explaining it.
Yeah, leverage can definitely seem like this, like a bit of a black box, but I think once you understand the mechanics behind it, it becomes much less mysterious.
Absolutely. So the video starts off by defining leverage basically
Yeah.
as a way to trade with more money than you actually have in your account.
Right. It's like your broker is giving you this temporary boost to your buying power.
I see, I see. Okay, that makes sense.
And it's important to clarify this isn't a loan in the traditional sense where you're paying interest. It's a tool that's it's specific to trading, and it lets you control these larger positions than you would with just your own capital.
That makes sense. Yeah, so you're not actually borrowing money and paying interest in the traditional sense. It's more like you're getting this temporary boost to your buying power just for the purposes of trading. I like how the video uses this analogy of a multiplier. So leverage is expressed as a ratio, right? Like 200 to 1, meaning you can control a position 200 times larger than what you're actually putting in. So if you invested $100 with that 200 to 1 leverage, you'd be trading with $20,000.
Exactly. Yeah. And that's where it gets really interesting. So, to give you a concrete example, the video uses this scenario with gold. Let's say, for example, gold is trading at $1,400 an ounce, and you want to buy 10 ounces.
Right.
That's a $14,000 investment. But if you were to use that 200 to 1 leverage, you'd only need $7 of your own money to control that entire position.
Wow, okay. So that $70 is what's called a margin, right?
Exactly. That's the amount of your money that's actually at risk.
Okay.
It's kind of you can think of it like a down payment, but in the world of trading.
Got it. Got it. Okay, that's a really clear way to understand it. So understanding that margin is really key to understanding leverage.
Yeah.
Because it's not just about, okay, I have access to all this buying power. It's also about understanding that your potential losses are amplified by that same factor.
Absolutely. It's a double-edged sword, right?
Right.
You have the potential for greater gains,
Right.
but also the potential for greater losses.
So the video highlights some advantages of using leverage. Obviously, it makes markets more accessible, especially for like smaller investors who maybe don't have tons of capital to start with. And of course, there's the possibility of multiplied profits. So even a small gain on a large position can turn into a pretty significant return thanks to the leverage.
Yeah, and that's really appealing to a lot of people, right? The idea of maximizing your returns. But it's important to remember that leverage itself doesn't create profit. It just magnifies whatever the outcome is.
Right, right. So whether the outcome is positive or negative, the leverage is just going to amplify it. Okay, that makes sense. And that kind of brings us to the other side of the coin, which is the risks. Because as you can imagine, the potential downsides are also amplified with leverage.
Exactly.
So the video, it sticks with that gold example to really illustrate this. So let's say the price of gold drops just 5%. On that $14,000 position, that's a $700 loss. And remember, your margin was only $70.
Right.
So in that case, you'd be completely wiped out.
That's right. And that's why it's so important to understand the concept of a margin call. Because if your losses start to eat into your margin too much, your broker will actually, they'll step in and they'll close your position automatically to prevent you from going further into debt. It's a safety mechanism, but really, it underscores how important it is to manage your risk when you're using leverage.
Got it, got it. So, on the one hand, you have this amazing potential for gains. But then on the other hand, there's this possibility of big losses. I'm starting to see why the video emphasizes risk management as being so crucial.
Absolutely, yeah. I think that's one of the biggest takeaways here, is that you really have to understand how to manage your risk if you're going to use leverage effectively.
Okay, that's a great point. So we've talked about the basics of leverage, how it works, the potential upsides and downsides. Now I want to dive a little deeper into some of the strategies for actually using it responsibly, because it's clear that this is not something to just jump into without really understanding the mechanic.
Yeah, absolutely. It's a powerful tool, but you need to know how to use it safely.
Right. So where do we go from here? What are some of the key things to keep in mind when it comes to managing risk with leverage?
Well, I think one of the most important things is understanding the difference between invested capital and risked capital.
Okay. I've heard those terms before, but
Right.
to be honest, I'm not entirely sure I understand the distinction.
So Your invested capital is the total value of your position, including the leverage,
Yay.
but your risked capital is your margin, the actual amount of your own money that's on the line.
Right, right.
So even though leverage lets you control a much larger position, you have to be aware that your potential losses are limited to that initial margin that you put up.
I see.
So
Yeah.
it's really about being mindful of that margin and how much you're willing to risk.
Got it. Okay, so that makes a lot of sense. So I'm thinking of it kind of like a seesaw, where your margin is the fulcrum, and then the leverage amplifies both sides, potential gains and losses, based on how much of your own money is actually at stake.
That's a great analogy. Yeah, it
Yeah.
really highlights the importance of being aware of that balance.
Absolutely. Okay, so we've talked about margin. We've talked about the difference between invested capital and risk capital. What are some other tools or strategies that can help with managing risk when using leverage?
Well, one of the most important tools is the stop loss order.
Okay, tell me more about that.
So a stop loss order is basically an instruction that you give to your broker to automatically close your position if the price moves against you by a certain amount.
I see. So it's like
Yeah,
setting a safety net to prevent those losses from spiraling out of control.
exactly. It's especially important when you're using leverage because, as we've seen, those losses can be magnified pretty quickly.
Right. Okay, so the video definitely drives home this point that
Yeah.
leverage, while it can be this really powerful tool, it requires a very strategic approach to risk management. It's not something you just kind of jump into without understanding.
Yeah, it's not a get-rich-quick scheme. It's
Mhm.
something that requires careful planning and discipline.
Absolutely. So before we move on to explore even more about how to use leverage responsibly, what stands out to you so far about this whole concept?
You know, I think what strikes me the most is just the potential. The potential for both incredible opportunity and significant risk, all kind of wrapped up in this one tool. And I think it really highlights the need for education, really understanding how leverage works and having a well-defined risk management strategy before you even consider using it.
I couldn't agree more. Okay, so let's continue exploring this video from Riqueza Vital as we learn more about the nuances of leverage and how to potentially use it responsibly. We'll be right back after a quick break.
One thing that often gets overlooked when people talk about leverage is the psychological aspect of it all. Trading with, amplified buying power, it can really mess with your head, especially if you're not used to it.
That's a really good point. The video doesn't specifically talk about trading psychology, but
Yeah.
it does mention the importance of constantly monitoring your positions when you're using leverage.
Right, because things can change so quickly.
Yeah, absolutely. The market can move fast, and with those, amplified gains and losses, being able to react quickly it's crucial.
Yeah, absolutely. And that's where having a well-defined trading plan and actually sticking to it,
Yeah.
it becomes so important before you even enter a trade, especially one involving leverage. You need to know, like, what are your entry and exit points? What's your risk tolerance? And how are you going to manage your emotions if the trade starts moving against you?
It's almost like having a pre-flight checklist
Ah,
for your trades,
exactly.
making sure everything is in order before you take off. Speaking of things that need to be in order, the video also mentions this thing called adjustment of margin, which, if I'm being honest, sounds kind of ominous. Can you explain what that means?
Yeah, so adjustment of margin is basically what happens when your losses start eating into your margin, meaning your account balance drops below a certain threshold, and your broker might step in and automatically close your positions.
So it's like they're saying, whoa, hold on, things are getting a little too spicy here. Let's cut our losses before they get any bigger.
Exactly, yeah. It's a way for them to protect their own interests. But it also, it kind of highlights that difference between invested capital and risked capital.
Right. Because remember, your invested capital is the total size of your position,
Oh.
including the leverage. But the risked capital is your margin. It's the actual amount of your own money that's on the line.
Exactly.
Oh,
So
yeah.
even though leverage lets you control a much larger position, you always have to be aware that your potential losses are limited to that initial margin that you put up.
Got it. Got it. Okay. That makes a lot of sense.
And that's another reason why setting appropriate stop loss orders is so crucial when using leverage.
Right. Because that stop loss order, it's basically telling your broker, hey, if the price moves against me by this much, just close the position automatically. Don't let it, get any worse.
Exactly. It helps you to limit those potential losses and prevents your margin from being completely wiped out.
So the video really emphasizes that. Leverage, while it can be a powerful tool, It requires this very kind of strategic approach to risk management.
Absolutely.
That's not something to just jump into lightly.
No, you really need to understand what you're doing.
Okay, so we've covered a lot of ground here. What would you say are the key takeaways about leverage that our listeners should really keep in mind?
I think the most important takeaway is that leverage amplifies both profits and losses.
Right.
It's not some magic formula for getting rich quick.
Right. Yeah.
It's just a tool that magnifies the outcome of your trading decisions,
Okay.
for better or for worse.
So risk management is paramount when using leverage.
Yeah.
Understanding those concepts like margin calls, stop loss orders,
Absolutely.
those are essential for protecting your capital.
Yeah, and I think it's also important to remember that leverage isn't for everyone. It requires a certain level of trading experience, risk tolerance, and, emotional discipline to use it effectively.
Right. The video ends by kind of encouraging viewers to, do their own research, look into specific trading strategies, risk management techniques. If they are interested in exploring leverage further, what would be your advice for someone who wants to learn more? Where should they go from here?
I think there are so many great resources available, both online and, in libraries. Books, articles, educational courses from reputable institutions.
Right.
These can all provide a much deeper understanding of leverage and how to use it responsibly.
Always good to do your research.
Yeah.
And, seek out those diverse perspectives.
Yeah.
Before making any financial decisions.
Absolutely.
All right, so before we wrap up this whole deep dive on leverage, I want to touch on one more crucial aspect of trading that I think the video kind of hints at,
Right.
but doesn't explicitly address. And that's the emotional side of things. Trading, with or without leverage, can be a real roller coaster ride. How do you think someone can prepare themselves mentally for those inevitable ups and downs of the market?
That's such a great point. Because even with a solid trading plan and risk management strategy in place, the psychological impact of trading can be huge.
Yeah.
Fear, greed, overconfidence, they can all cloud your judgment and lead to these impulsive decisions that,
Right.
In hindsight, you probably wouldn't have made.
So it's about staying level-headed, not letting your emotions get the better of you, even when the market is throwing those curveballs your way.
Exactly.
But how do you actually do that?
One way to kind of prepare mentally is to try to develop this detached, almost scientific approach to trading.
Okay.
Treat it like an experiment where you're testing your hypotheses and then analyzing the results objectively.
Interesting.
Trying not to get emotionally invested in every single trade.
So it's more about focusing on the process and the data,
Yeah.
rather than getting caught up in the emotional highs and lows
Yeah.
of each individual trade.
Exactly. And remember that losses are going to happen. It's inevitable. It's
Yeah.
how you manage those losses that will ultimately determine your success as a trader.
Right.
Don't let a few losing trades derail your confidence or lead you to make these reckless decisions. Instead, view them as learning opportunities. Adjust your strategy if needed and keep moving forward.
That's great advice. Now, let's shift gears a bit and talk about the bigger picture of leverage. We've been focusing on individual traders, but leverage also plays a huge role on the financial system as a whole, right?
Absolutely.
Yeah.
It's used by institutions, like banks, hedge funds, even governments, to magnify their investments and potentially generate much larger returns.
Right.
It's a fundamental part of modern finance, but it also comes with what we call systemic risks.
Right. The video mentioned that leverage can make investments in less volatile markets much more fruitful. Can you explain what that means in the context of, say, a large financial institution?
Sure. So imagine a bank invests in something relatively stable, like government bonds.
Right.
The returns might be modest, but by using leverage, the bank can significantly amplify those returns. However, if those bonds unexpectedly lose value, the bank's losses are also magnified.
Right.
And that can have ripple effects throughout the entire financial system.
So it's like this high-stakes game of dominoes, where one institution's leveraged losses can trigger this chain reaction, leading to wider market instability.
That's a good way to put it, yeah.
Wow. Okay, so it sounds like while leverage can be a powerful tool for both individuals and institutions, it needs to be used responsibly and with a clear understanding of the potential risks.
Absolutely.
Well, I think we've covered an incredible amount of ground today, from the basic mechanics of leverage all the way to its broader implications for the financial system. Before we wrap up, I want to leave our listener with one final thought to ponder. We've talked about the importance of risk management, emotional discipline when using leverage. But what about the potential downsides for the market as a whole? Is there a point where using leverage becomes irresponsible, not just for the individual trader, but for everyone?
That's a really thought-provoking question, and one that I think deserves careful consideration. There's no easy answer because the implications of leverage, they can vary greatly depending on the context and specific
What?
circumstances. But it's definitely a topic that warrants further discussion and debate as we continue to kind of grapple with the complexities of modern finance.
It's like we've added this whole other layer to the conversation about leverage. It's not just about like you and me managing our own personal risk,
Yeah.
but it's about the impact on the entire financial system.
It really is, yeah. It highlights how interconnected everything is. One person's use of leverage can have these ripple effects that extend far beyond their own portfolio.
You mentioned earlier how institutions like banks use leverage. And the video touches on how leverage can make investments in things like government bonds more, quote, fruitful,
Yeah.
even though those are generally considered less volatile. Can you unpack that a little more?
Sure. So imagine a bank invests in government bonds, which typically offer modest but relatively stable returns.
Yep.
By using leverage, the bank can amplify those returns, potentially making significant profit.
Right.
However, if something unexpected happens and those bonds lose value, the bank's losses are also amplified. And because banks are such integral parts of the financial system, those amplified losses can create this domino effect, impacting other institutions and markets.
So even when you're dealing with assets that are perceived as safe, there's still an element of risk involved, especially when leverage is part of the equation.
Absolutely.
And that's why it's so crucial for institutions, just like individual traders,
Yeah.
to have those, really robust risk management strategies in place.
Yeah.
They need to be prepared for those unexpected market fluctuations
Exactly.
and have safeguards to kind of mitigate those potential losses.
Sure.
The 2008 financial crisis is a perfect example of what can happen when leverage is used excessively
Sure.
or without proper risk management, right?
Absolutely. It was a stark reminder of the potential systemic risks associated with leverage.
When the housing bubble burst
Yeah.
and mortgage-backed securities started plummeting in value, many financial institutions that were heavily leveraged experienced those catastrophic losses.
Right.
And those losses rippled through the entire financial system, leading to that global credit crunch and a pretty severe recession.
Yeah, it had a huge impact.
It's amazing how one concept, leverage, can have such a profound impact, both for individuals and for the world.
It really is. It speaks to the importance of financial literacy, understanding the tools that drive our financial systems.
Absolutely.
Whether you're an individual investor or the CEO of a major bank, understanding how leverage works and using it responsibly is crucial.
Well, I think our deep dive today has shed some much-needed light on this often misunderstood concept. As we wrap up, what's the one key message you hope our listeners take away from this exploration of leverage?
I think the most important takeaway is that knowledge is power. The more you understand about leverage, the better equipped you'll be to make informed decisions, whether you're considering using it yourself or just trying to understand its role in the broader financial world.
That's a perfect note to end on. So if you're listening and thinking about using leverage in your trading, remember to do your research, have a solid risk management plan, and maybe most importantly, be honest with yourself about your risk tolerance and how well you can manage your emotions when things get a little rocky.
All great points.
Well, it's been a pleasure exploring the world of leverage with you today.
Likewise.
And to our listeners, thank you for joining us on this deep dive. We'll catch you in the next episode.